Sorry about that, guys. I got cut off. I had an incoming phone call and it blocked out the video. So as I was saying, as a financial freedom architect for my clients, I advise them to invest in income producing assets. So let's go over an example using my strategy to successfully retire well before you're 60, 65 years of age. But if you plan to work that long, all the best to you. So let's do an example using the figures that we did on the last video. So you have $425 a month to save for retirement for 12 months. That's $5,100. Now, rather than putting that money into the stock market, into bonds, or into other securities on Wall Street, I would suggest you use that money to purchase one property every year for the next 30 years. And the $5,100, that will be your down payment to either apply for a mortgage or to seek out hard money lenders that can loan you the entire amount to purchase that property, or to negotiate on the financing and use the $5,100 to purchase the property and have the owner hold the note, and you make payments to him rather than the bank or a hard money lender. I've invested in real estate throughout the U.S., so if you have any questions about that, in addition to financial planning, feel free to email me at the email below, and I'll be able to assist you in real estate, financial planning, insurance, etc. But back to the example. So at the end of the year, you have $5,100 to purchase a property. Now let's say your mortgage for this particular property is, for round numbers, $500, and your rent received every month for this property is $700. Actually, let's do $900. So you're receiving $900 a month for this property. Your mortgage is $500. That gives you $400 every month in income. Now, let's account for expenses. You have taxes, you have insurance, you have utilities, sewer bill, you have maintenance, management. So let's deduct $200. So now your net income before taxes is $200 every month. Now let's say you do this 30 times. Before we do that, let's go to your gross annual income. Your net annual income, 200 times 12, that would be $2,400 a year in annual net income before taxes. Now let's say you do this 30 times every year for 30 years. In other words, every year for the next 30 years, you buy one property. So when you're 65, if you're 35 now, or when you're 60 and you're 30 now, next 30 years, you'll have 30 properties, because every year for the next 30 years, you buy one property. So you're going to times 2,400 times 30. That's $72,000 a year in passive income by buying one property a year, using the $5,100 you would have given to some broker to risk it in the markets. But now you have 30 rental properties, making $72,000 a year. How much is that every month? That's $6,000 a month. That's almost 5 times what you would have received if you given your money to somebody else to invest in risky securities. And this is net, it's not gross. In addition to the income, now you have 30 properties. Let's say half of them are paid off at this point. So you have 15 properties at an average market value of, let's say, $150,000. Actually, let's do $100,000. So you have market value, free and clear, 15 properties at an estimated market value of $100,000. So now you're at $1.5 million in wealth, pure wealth. You don't own any mortgages, you don't own any taxes, there are no liens on the property. You have 15 properties valued at $100,000, gives you $1.5 million in wealth. That's how it's done, people. This is how you become wealthy. This is how you become financially free. And this is how I advise my clients as their financial freedom architect to reach their retirement goals well before 60, well before 65. Right now, personally, I'm on my path of financial freedom. I'll be there in 3 years. So I'm practicing what I'm preaching. So again, would you rather have $1,275 a month coming in, or would you rather have $6,000 a month coming in? Would you rather be worth $306,000 or $1.5 million? Choice is yours. Feel free to email me at the email below, and I'll see you in the next video.